Hello, everybody. Glad to be here today with the RMS team. Um, Today, I'm going to talk about what pharmacies need to know about pandemic relief and legislation. But I got to say, I just heard the end of Bob's talk there, and he's a legend, and what he's saying is spot on. I actually was going to touch on some of that here today, but what we're seeing in the industry is constantly evolving. With that constant change and evolution, we're seeing this opportunity. We work with hundreds of pharmacies here at Sykes Company all over the country. And I can tell you that the pharmacies that are doing what Bob preaches, you can see that in their numbers. It works. These pharmacies are leading the change. It's adding to their bottom line, um, among all the other benefits that come with that. So, uh, you know, I hate to follow up with Bob. That's a tough task, but I'll do my best here. And we're going to talk about mainly, as we get into tax season, what we're facing here today. Obviously, everything I'm talking about here, please speak with your advisors, your professionals. This is educational, informational only. It is geared towards pharmacies. Um, and we're going to go over the CARES Act, Consolidated Appropriations Act, which was the bill signed at the end of December, which really changed a whole lot of the pieces of the CARES Act. So it kind of threw a bunch of updates here in January that we're still trying to figure out, still waiting on guidance, and we'll get into some of that as well. But just like Bob was saying, I mean, I'm glad I caught the tail end of what he was saying. We are seeing a dramatic evolution here in pharmacy, and with a COVID environment like this, and you guys on the front lines like you are, now's a great opportunity to really take it to another level. And frankly, if you're not taking it to another level, you're going to be left behind, and you're going to struggle. You have got to change here in this industry, and it's actually happening faster than it normally would, although it has been fast, changing pretty quickly here in past several years. But what we're facing now is really putting the pedal to the metal for that change, and you've got to get on board here. And so I'm not going to preach, uh, redo what Bob said, but what he said was spot on. And I can tell you from the accounting side, we see those numbers in the pharmacies that are doing just that, and it's pretty impressive. So when you're running pharmacies that high powered, efficient, cash flow strong, margins are strong, payroll's under control, balance sheet strong, the accounting fundamentals are there, well, you're going to have some tax issues um, that are a result of that. And so, tax planning first and foremost is very important, and even more so in a pandemic environment, because we are faced with the PPP, all these different changes here. And I'm just going to go down the list and kind of tack off or touch on each one, um, and just kind of have a general discussion. Please throw in some questions or anything. I'm happy to answer any questions that are out there. But obviously, when the pandemic started, the CARES Act was passed, I think March 27th, 2020. And the big thing in there was the Paycheck Protection Program. I think the NCPA had a survey out where 98% of pharmacies got a PPP loan, where you had 8 weeks to spend it. Then it evolved to 24 weeks. Now you can pick your own time period to spend that money from the date of funding up to 24 weeks. And at first, back in April or May, I should say, the IRS said, well, that Paycheck Protection Program is going to be taxable. So we are operating all year with the assumption that, hey, this is going to be a taxable loan, even though you don't have to pay it back. You're going to pay tax on it. And furthermore, the IRS came out and said, if you expect to get forgiveness, it's taxable in the year, in the 2020 tax year, even if you don't apply for forgiveness until this year. So, that made tax planning very difficult. That was going to put a lot of pharmacies in some tax problems. And with the Consolidated Appropriations Act, they fixed that. Congress fixed it, and they said, no, all of it's non-taxable. You do not have to pay it back. The expenses are deductible. The loan itself is non-taxable, and you get some tax attributes to that such as basis if you're an S corporation, which is huge. If you're an S corporation, you want basis in your entity. It's kind of like a checkbook. Deposits go up when you take money out; it goes down. Basis drives it up, so we want that basis in there. So that's a huge benefit we saw here with the Paycheck Protection Program and the Consolidated Appropriations Act. Furthermore, they did expand. They had a $50,000 and under loan amount was pretty much automatically forgiven. You don't have to meet the FTE reduction calculations and all that. You could just, if under 50 grand, you can just sign a piece of paper and you're good there. And then in the act, the consolidated, I'm just going to call it the CAA, they also moved the one-page application, forgiveness application, up to $150,000. So you would really have to just sign that as well. You wouldn't have to submit all this information to your lender, the calculations, the documentation. Theoretically, you still have to make those calculations and know whether you have full forgiveness or not on that loan. And then anything over $150,000, you're still going to have to go through that full process for forgiveness. Now, I will say with pharmacies, uh, you know, pharmacies didn't really see, they didn't see the hit that other industries did. Most pharmacies actually saw increases in revenue. And so keeping people on payroll and meeting those requirements was really not an issue. So not too concerned about that. But we did see a lot of banks say, get your application in, get your application in, get your application in. I'm ready to get paid, because these banks got paid when the SBA gave that forgiveness. But now we're facing a problem here where it's conflicting with the employee retention credit. But before I get to the employee retention credit, I'll just say that, in the CAA, there was also the PPP second draw loan, which is you could get a second PPP loan if you've got a first and you used it all as you were supposed to. But you had to have a 25% reduction in revenue. A lot of pharmacies, actually, I don't think we had any, maybe one pharmacy, a niche pharmacy, was eligible there. So not expecting a lot of pharmacies to get that. I call it the second draw loan there. So not going to spend a lot of time on there. But then, when all these banks were saying, hey, get your application in, and you apply for forgiveness, you get your forgiveness, that's great and all. We always had the stance where you need to be patient with all this pandemic relief, with all the legislation. This is all uncharted territory. Everything you're pretty much seeing on here is all uncharted territory, which means there's no guidance, there's no precedent. It's operate at your own risk. And so be patient, wait for the guidance to come out. All these items you see on here, they all link together some way or another, whether we're doing the tax return, whether we're doing the accounting, the books, whether we're applying for other relief items, they all link together. You have got to be very careful and patient. The pharmacies that went ahead and applied for PPP forgiveness we're waiting on information from the IRS, but the employee retention credit can conflict with that. And the employee retention credit, now this is this was a part of the CARES Act that passed back in March of 2020. At first, it was not eligible to pharmacies. It wasn't eligible if you got a PPP loan, and with the NCPA data, pretty much all pharmacies did. So if you had the PPP, you couldn't get the ERC credit. But in the CAA, they said you can retroactively now go back, even if you got a PPP loan, and see if you are qualified for the employee retention credit. Now, the employee retention credit, you have to have a 25% drop in revenue quarter over quarter. So 2020 quarter over 2019 quarter. That's one eligibility metric. Most pharmacies didn't have that 25% reduction. If you did, there's no requirement that it was due to a pandemic. You could have moved locations and had a rough start getting set up, and your revenue dropped 25%. You could be eligible for this credit. It is not, that 25% drop in revenue is not dependent on the pandemic. You don't have to prove that it was due to the pandemic. If you don't meet that test, which a lot of pharmacies do not, there's a second test that you could potentially qualify, and that is if your pharmacy was essentially had a partial shutdown due to a government order. And if you had that partial shutdown, the impact of your pharmacy was not nominal. There's no guidance on this at all. There's a FAQ at the IRS, which is not, the IRS makes it very clear on their website, these FAQs you cannot rely on, but that is the only information we have from the IRS on what a partial shutdown is that directly impacts a pharmacy that's not nominal. So what bottom line is what I'm getting at here is this credit is up to $5,000 per employee. So, you know, $10,000 of wages is the max per employee times 50%. The credit amount is $5,000. So if you had a partial shutdown in your pharmacy for, let's just say, a month, and you lost your gift shop sales, you lost $30,000, you say, well, that was not nominal. And you're required to shut down that gift area. You know, potentially you could argue and say, I'm eligible for this credit. And so you would take your a month worth of payroll for the period the order was in effect, and you would calculate that credit. And with the with the $10,000 max and then the $5,000 credit amount max per employee, $10,000 wage max, and then times 50% is $5,000 per employee. And I can tell you that this credit is very substantial for a lot of pharmacies. We do not have a lot of pharmacies that qualify right off the bat right now, but I'm telling you, we're digging into this, and I'm waiting on more information on it. But where this conflicts with the Paycheck Protection Program is the IRS says you can't double dip. So you cannot use Paycheck Protection Loan, which most got in April, May. You can't use those loan for forgiveness, the payroll costs for forgiveness, and claim those wages for the ERC credit. So if you get a $100,000 PPP loan and you spend it all on payroll from April to the end of May, let's just say, but through April through the end of May, you're also under a partial shutdown eligible for the ERC. You can't double dip those same wages for the PPP you use the PPP for and the ERC. And if you've already applied for forgiveness, you're kind of stuck here until the IRS tells us if you may even be eligible. If you haven't applied for forgiveness, you've got some flexibility here. You could do the ERC if you're eligible for this period, and then the PPP for the second period. And you could get both, but you just can't double dip on the same wages for each. So, you know, bottom line is we're still getting a lot of developments here, and this employee retention credit is something you got to look at a little closely. We haven't pushed out any information on it. Actually, this is the first I've really spoken to any publicly about it. But be on the radar for this one. There might be some opportunities for some pharmacies, and it is a very substantial credit, generally speaking, if you can qualify. Now, economic injury disaster loans, grants, you know, we saw those grants. A lot of pharmacies applied for those grants up to $10,000. You don't have to pay it back. You can deduct the expenses that you're using that money for. You're still getting the tax attributes I talked about. You don't have to pay it back. But it's not taxable. So those grants, most got about $10,000. That was the cap. Non-taxable, don't have to pay it back. If you got less than $10,000, because the SBA kind of modified that program, I would say like in late April, May, part of the CAA is now that they're going to be emailing groups and hopefully get you whole to the $10,000, because I believe the law was $10,000. So if you got, say, $3,000, you may be getting an email from the SBA saying, hey, your other $7,000 is coming. Not 100% sure about that, but I'm pretty sure that's on the horizon. The loans itself, we saw a lot of pharmacies get those. oh, I wouldn't say a lot, but we saw pharmacies getting some of these economic injury disaster loans up to $150,000, 3 3/4 interest rate, very, very reasonable terms, pay it back over 30 years. There were requirements on how you use those funds, just like the PPP. Um, but we saw pharmacies send that money back because of the terms and conditions that were associated with those loans. You could not take distribution or draws from the pharmacy to while you had those loans on the books unless you asked the SBA for permission. That doesn't sound very good to me. So a lot of pharmacies were sending those back. Um, but nevertheless, they're still there, reasonable terms, um, something to consider. The SBA loan forbearance. Now we saw this with a lot of pharmacies as well. Pharmacies that have been buying pharmacies that have bought their pharmacy in the past using SBA financing or maybe expanded or whatever it may be. If you had that SBA financing on the books, the SBA, as you know, for those that did, they paid 6 months of your principal and interest. Um, so they paid, if you had a $17,000 SBA loan payment every month for 6 months, they paid it. That also is non-taxable. Don't have to pay tax on it, and you get to deduct the interest. So I mean, we're talking about cash flow here. These are pharmacies got a lot of cash flow last year with the PPP, the SBA loan forbearance for those, a $10,000 grant. Maybe some we're going to be able to go back and get the credit because you can go back and amend payroll tax returns to get that credit if you're eligible. Again, there's a lot to weed out there. We're waiting on a lot of guidance, but keep your eye on that one. So there's a lot of cash coming into pharmacies, and just going off the last presentation with Bob, you know, when you're evolving, when you're changing, when you're doing things different and leading the change in the pharmacy industry, it requires capital, and obviously cash is king in a pharmacy. So, we've seen a lot of pharmacies really be able to shift their balance sheets, strengthen their balance sheets, um, and tie that with the value-based pharmacies out there. You're really seeing pharmacy get a good strong base here to jump off forward into after this pandemic into. So, it's a really exciting time right now for pharmacy. But back here, the SBA loan forbearance here. So again, that's non-taxable. But so they paid 6 months. The SBA did on your behalf. And right now, as part of the CAA, they expanded that. So I believe if they'll pay another 3 months beginning in February this month, but it's going to be capped at $9,000 this go round. So if you got a $10,000 loan payment that was originally part of the forbearance, you should get a $9,000 payment from the SBA for another 3 months. And if we're getting into the SBA loans, right now, I can tell you the pharmacy niche banks are gearing up right now because you can essentially waive SBA fees if you're able to close some deals between February 1st and the end of, I believe it's September. Waive those SBA fees, which can be quite substantial, and you get loan forbearance. I believe you get 6 months in those cases. So if you're looking to expand, looking to grow, speak to the pharmacy banks out there. Those guys can get you set up going right here with these benefits that are currently out there that we may never see again. I was talking to one the other day, and I believe they're going to save, between all these, the waiving the SBA fee, the loan payments. It ended up being $200,000 that they're not going to have to put onto the loan. And then we're thinking, you add interest onto that that you're not going to be paying either. So expanding operations, growing your pharmacy, now's a good time to be looking at that if that's in your radar. HHS provider relief. Boy, this one was a mess at first. It still is. We saw pharmacies get payments in April here. Didn't have to pay that back. You had to attest to it that you accept the terms and conditions. Wasn't a whole lot of money in many cases. And then they opened it up to additional draws or distributions, and they had about 3 of them, I believe. And so we saw pharmacies apply for more funding under the HHS. And then I believe it was August or September, several FAQs at the HHS come out and say, if you applied for these funds using prescription revenue, that does not count in determining your provider relief amount. So my advice here is, I'm not an attorney. You need to speak with a healthcare attorney on that to determine what you need to do, whether that's pay that back or what, because if you're using prescription revenue to get that money, and it says you can't use prescription revenue, you have to have revenue from patient care. And it's very clear in the HHS Provider Relief, which is a great website, by the way, if you just type that in Google, that prescription revenue does not count as patient care. DME does, that those kinds of things do, but prescriptions do not. Speak with your healthcare attorney on that, because you may not be in compliance with the terms and conditions. And I can tell you that we got a lot of pharmacies, got a lot of money there. And so that's the due diligent thing to do. And there's reporting requirements coming up for that, which, by the way, you have to report a whole lot of information on there, which is when they might do a true up of whether you were really eligible or not. Who knows? But there was a lot of confusion when this was all going on. Maybe they just will sweep it under the rug. Maybe they'll go back and try and get this reconciled. We'll have to see, but just speak with your attorneys if you got a whole lot of money on that. Qualified, and by the way, that HHS provider relief is taxable. So that is taxable money if you do not pay it back. Okay, qualified improvement property. This was part of the CARES Act. So they fixed this, and essentially this was fixed as part of the Tax Cuts and Jobs Act of 2017. And, what I want to touch on here is, if you did a lot of USP 800 upgrades or anything in your pharmacy improvements, that is qualified improvements, which would be, mostly, USP 800 upgrades, not where you're expanding your building, but improving the building itself. You can now get that as 15-year property for tax purposes instead of 39-year depreciable property. And you can take, I believe, Section 179 on that. So what you can do here is you can essentially go back, make the corrections, write it all off under the bonus or 179 depreciation rules, and essentially get refunds for that writing off of all that property. You got to speak with your advisors on that, make sure that's the right thing to do. But if you had any big improvements in the 17 or 18 or 19, check on that. Make sure you maximize the opportunities are there, because you can get money in your pocket today by filing an amended return and getting that corrected. So something to put on your radar. They also expanded net operating loss. So if you had maybe a net operating loss in 2019, even 2020, you can carry that back 5 years. So you can take that loss, carry it back 5 years, and apply it to tax you already paid and get refunds. I know we did a few of those in 2019. There'll probably be a few in 2020. And so these folks were able to get refunds, cash in the pocket. And we're talking a lot of cash here right away. I believe that expires in 2021 unless they update that in the new legislation that I hear is being discussed right now. So we're probably going to have even more changes. But if you had any NOLs, just something to think about. Accrual to cash accounting, we still, this is from the Tax Cuts and Jobs Act, but I still talk about it because we still see pharmacies out there not taking advantage of it that are eligible. Essentially, if you have gross receipts, revenue under $26 billion, and you do have to assume uh, controlled groups. So if you own 6 pharmacies, you have to total your revenue there. But if you're under the $26 million dollar revenue mark or gross receipts average for the prior 3 years, you're eligible for the cash accounting for tax purposes. And when you go from accrual to cash, generally you're writing off all those receivables and creating a big expense, which lowers your taxable income. So this one expires at the end of 2025. Still going to be talking about this, but something to think about for those that have not taken advantage of that. Now, with that being said, you definitely want to keep your books on accrual. You do cash for tax purposes, but you keep your books on accrual basis so you can really see what's going on month in, month out with the receivables, payables, inventory. You got to have accrual-based accounting books, period, for pharmacy. No questions asked. Qualified business income deduction. Pharmacies are eligible for this qualified business income deduction, generally speaking, but I bring this up because we're still seeing a few pharmacies that didn't take advantage of this either. Matter of fact, I saw one the other day. It was $100,000 that they lost. They didn't, the accountant missed, and so they're going to have to go back and amend returns to get this. But you should be taking advantage of this qualified business income deduction, which was part of the Tax Cuts and Jobs Act. That is a 20% deduction for your qualified business income. So if you have $100,000 of qualified business income, you get a deduction of $20,000. This is for the S corporations, the partnerships, the sole proprietors. And this was designed to get those pass-through entities closer to a C Corp tax rate, which is 21%. So definitely be looking at that if you haven't taken advantage of that. R&D tax credits is another thing, and this is something to really be looking at now, because with all the changes and the what pharmacies experiencing right now, getting into expanding a vaccination program, learning about a vaccination program with COVID, updating your processes and procedures, anything you're doing research and development wise that meets a 4-part test. There's got to be uncertainty, technological in nature, so physical science, those kinds of things. It's got to be a new business product or process for the pharmacy, and there's got to be a process of experimentation. So you've evaluated alternatives and those kinds of things. And so if you meet that 4-part test for the activity you're doing, so you're maybe implementing a new vaccination program that you've never done before, or you're getting into sync, you're getting into a sync program, going off of what Bob was saying, and you're learning all about it, document all that, document what you're doing, document the 4-part test, document the time you're spending in there, and you may be eligible for a tax credit there. So, if you're going to put invest time into this stuff, hey, you might as well get a credit while you're at it. Just, you got to document it. Definitely be doing that for that one. Oh, let's see. I believe that's all I had. I ran through that. I know we had limited time here. I didn't want to hold anybody up, but I'm happy to take any questions or do whatever you guys would like from here on. You got me the rest of the day. But I appreciate the opportunity to be here with you today.